Welcome back. We're still in conversation with Mr. Mohnish Pabrai. Everyone's talking about the mess that's in the NBFCs today. But what really started off was that some of that paper that was AAA rated suddenly got downgraded to nearly junk.
Sure.
So do you think that, there would be some kind of a dent in, with regard to investors putting their money in some of these rating agencies? You have a large chunk even in CARE. So I just want to know, do you think, some of these rating agencies will be looked at with one question mark or a lot of question marks?
Yeah, so just first of all about the, the liquidity and the crunch that we're facing. So Polonius in Hamlet said to his son when he was going off on a long journey, neither a lender nor a borrower be. And Buffett paraphrased Polonius and said, neither a short-term lender, short-term borrower, nor a long-term lender be. In the finance business, it is very important to match assets and liabilities.
Right.
And what a lot of the NBFCs which are in trouble now did is they wanted to have fat spreads.
Okay.
You can get very fat spreads if you borrow short and lend long.
Right.
But you also get caught, like we just saw what happened. So it's toxic to actually do borrowing short, lending long. So that's just an aside of what the issue is. But I think looking at rating agencies, so during the financial crisis in the US and the global financial crisis, 2008-09, the primary culprits of the financial crisis were the rating agencies in the US, Moody's and S&P. And Moody's and S&P had thousands of pieces of paper rated AAA that went to crap.
Right.
And there were a lot of hearings, there were a lot of calls for heads to roll. When the dust settled, no one went to prison. They paid very modest fines, and their stocks are at all-time highs.
Right.
So the interesting thing about rating agencies is there is almost no business on the planet that has a wider or deeper moat than a rating agency. It is almost a license to print money. So it's a phenomenal business. Sometimes they screw up. In fact, we had big screw-ups in 2008 and 09, and we had some screw-up recently. I actually think it's good news that the nature of the screw-up that happened in India was relatively contained. It's only really ILFCs, subs, and so on. And I think it was a wake-up call for the rating agencies to tighten up.
Okay.
So that's always good.
So you believe that it's a blessing in disguise, maybe?
I don't believe there is any long-term impact on the rating agencies from these events.
So let's talk about two sectors. One is banking space. In the past, you've had a holding in South Indian Bank. That's a few years ago. What's your take on the banking space? And also, everyone's quite worried. The rupee is depreciating. Well, you're lucky. More amount of money to the dollar. But what's your take on both these two spaces? Because I was looking at your holdings. You have a rather large chunk in healthcare global enterprises. From the pharma space, if I would call it pharma. But otherwise, what's your view on both these two sectors?
I think on the banking side, and I think just if I look back at the history of Pabrai funds, I have had trouble with levered financial institutions. I've had a number of investments going back 19 years that haven't worked. And we had trouble with even the Indian banks we invested in, and we exited at a loss.
Right.
And so in general, I mean, I think Repco is an anomaly. In general, I really don't have much interest in investing in levered institutions.
So you're not buying banks, you're saying that you're quite bullish on India, you've been deploying money in the last week or so. Banks doesn't come on that list?
Definitely not. I think the thing is that one of the things to remember is that a lot of businesses can make money by levering up.
Right.
If you lever up with a sliver of equity, the equity returns can look really good.
Okay.
The hallmark of a great business is generating very high returns on equity without any leverage.
Okay.
That's a great business.
What about the pharma space? The rupee has been depreciating. One would have thought that some of these pharma companies will do well. Just one holding that I found, Healthcare Global Enterprises, as per the September 2018
I think Healthcare Global is not a pharma company.
It's more cancer treatment.
Treatment and fertility clinics and so on. Again, not interested in talking about portfolio, but I think both those areas, India is vastly underserved.
But you're not buying any more pharma?
Well, I don't have any pharma. Okay. And I actually think pharma is outside my circle of competence.
Okay, what you do have and what you've increased in, in this particular fiscal year is Kaveri seeds. So let's talk about the agri theme that's likely to play out. What's your take out there? How bullish are you? Because I'm just looking at holding increase. Kaveri seeds is something that did come up on the screen. So what's the investment rationale, at least?
Well, so I think I don't look at things from a sector perspective, and I don't think investors should look at sectors. Okay. I think the focus ought to be specific businesses. Yeah. Because there is a lot of difference in the way a Kotak performs versus a J&K Bank performs. Right. I mean, the sectors don't mean much. I think you have to get down to particular businesses. And I think it'd be a mistake to say that I have an interest in the agricultural sector, or I have an interest in the auto sector. I get interested in particular businesses with particular nuances. And I got interested in Kaveri for very specific nuances, which we will discuss, Nigel, after at some point when we no longer own it, which is probably a long ways off.
Well, a lot of investors out there, they track Mr. Mohnish Pabrai. What's the rationale when you're putting in money? You told us one-time price to earnings. That's something, on a forward earnings basis. Rain Industries, that's one of the companies I think you have bought at sub 50 rupees. The stock is half from the top, but it's still much higher than your buy price. So what was the investment philosophy that went into this?
Yeah, so Rain Industries is an interesting company. I mean, we've owned it, I think, for about a little over 3 years. And we paid between 30 and 45 rupees in 2015 for our Rain position. We own just slightly under 10% of the business. And I like the business, I like the management. Okay. And Rain was a company which has about $2 billion in revenue. Okay. And in 2015, they were trading at a market cap of 180 million. Yeah. Less than 1/10 of revenue. Look, I told you Fiat was trading at 1/30th of revenue. Right. So they were trading at a very small fraction of their revenues. And they are in a business with some cyclicality. And the cycle was at a very low point, but they're also a low-cost producer. So when they have a cold, the rest of the industry has pneumonia. And so Rain actually would have a hard time losing money. Okay. Because by the time their margins get slimmed down, the rest of the industry starts losing money and capacity gets taken out, which corrects the situation. So in the situation with Rain, I thought in 2015 there was a very high probability that in the next 3 or 4 years, the net income of the business would exceed the current market cap. And that actually has come to pass. So now that it's a company that makes around 10 rupees a share a quarter, and we paid about 35 rupees for the stock. And so you do the math on that. Yeah. And so we like the business, we like the management, we think they're very good capital allocators, and we're going to sit in for a while.
How important is the promoter when you're allocating some kind of money? We've seen a lot of issues that have cropped up. Yes, we have corrected on the index, so these issues come to light. Auditor issues, promoter issues as well. How important, when you're allocating some money, how important is a promoter?
Yeah, so I think we have, as investors, we really have 2 or 3 issues to be concerned with as far as promoters go. The first most basic issue is, are they honest? Yeah. And is it a high integrity operation? Are they siphoning off the money? Those are the first basic things we have to get past. So far, I've lost money many times on investments in India and also in the US in 19 years. I've never lost it because of fraud. I've lost it because I was stupid, but not because of fraud. So the first layer in India, at least, we have to be vigilant on is, are we dealing with a high quality, highly ethical promoter group? Right. After that, we have to get to the next level, which is, are they great operators? Are they great capital allocators? Are they running the business for the shareholders? What are the compensation arrangements? All those areas. So we need to have a view on all of that. And then more important than all of that is the nature of the business. So there are some businesses, I mean, if I take a business like CARE, a rating agency, or Moody's or S&P, it almost doesn't matter who's running it. It almost doesn't matter who's running Coca-Cola. Right. These are very strong moats that can withstand even mediocre or poor management. But they're the exception. The norm is that you do need great execution to get great results. And so we have to make sure that we're aligning with promoters that are high integrity, but they also know how to allocate capital and they also know how to execute.
You know, in the last few months, people have been relating this to 2008. I was finishing my master's at that point of time. But 2008, does it scare you, or do you believe stock specific will still make money in the next 3, 5, 10 years? Are you worried?
Well, what we have seen in the Indian market so far is nothing compared to 2008.
Yeah.
So this is, at least what we have seen so far, does not have any direct comparisons. And I think from my perspective, like I said, I think we're focused on individual businesses. We're not focused on market conditions or what markets will do in the future, or whether they're going up and down. All that, quite frankly, I don't know and I don't care. If markets decline further, probably my own portfolio goes down, which is perfectly fine. We have no leverage. We can hold these things forever. But we would consider that good news. So I've always thought that declining markets are great news for investors.
It's been a pleasure talking to you, Mr. Pabrai. Thanks so much for coming down to our studio. Always good to speak to you. Well, on that note, we'll wrap up on the show. Thanks so much for watching. That's Mr. Mohnish Pabrai telling us he's definitely investing in the Indian markets. He's definitely bullish going ahead as well. And he says it's not the time to bury your head in the sand. Thanks so much for watching.